Welcome back, Katie. Great
Thank
to hear your voice, Katie.
you as well.
So, the big question, the $1 million question, the $1 billion question, it was 4,800 the low for quite some time, or is this a failing rally that we're going to take out that level? And should that happen, what kind of downside would there be?
I would say it's obviously proven to be a short-term low, if not maybe even an intermediate-term low, the
Hmm.
early April low for the S&P 500.
Right.
However, I would suggest that it's probably not the final cycle low, and that's hopefully you can see the screen here.
Yeah.
Highly related to the monthly gauges that we track. If you notice here in the bottom window, the monthly
Yes.
MACD has a brand new sell signal. And so that takes us back to about March of 22 as a fair comparison. And of course, that's
Okay.
not a positive comparison.
Right. And from a higher level.
Yeah, and we
Okay.
exactly. And we have also an overbought downturn that equates to the same period. So when we see that prolonged overbought, that is a reflection of the primary bull cycle, but now it's really lost its hold based on these metrics. So that would tell us at this low, while it's proven to be, a nice sort of short-term relief rally off of it, I think we've got a little bit more downside this year before we get to that final low. What I would like to at least see would be something better out of these monthly stochastics. Notice after 2022, they had to get oversold, but then also had
Right.
to see a retest. And it was the
They had to do
retest
some
that
work.
became, yeah, it's a process, as we all know.
Yes. So, where's the bottom, the top of your cloud right there? Was that about 4,000?
Yeah, that's about 4,000. It doesn't act as a magnet, and of course, it's a moving objective. So I'll
Right.
zoom in a little bit to show you what we're watching. So here's the weekly cloud model for the
Okay.
S&P 500. That would be a gauge of support. If you post consecutive weekly closes below, that's officially a bearish reversal in our work. You can see there's some former resistance from back here, right? From about 48.10, I would put it at from the early
Oh, yeah, there was a
22 high.
breakout. Yeah.
Yeah, so there is a zone there. But when I think about downside objectives, I often go to the Fibonacci's, which I know you all know very well. And so what we had been watching in that regard is this one in part. And there are actually two 38.2% retracements that were focused on close to this one here. It's 51.33. And
Uh,
that, see how that aligned with the cloud at this point. So
it
that's
did.
definitely a key level because below that, then this kind of 4,500 would be targeted as a 61.8% retracement. So we
A
feel
lot
that
of people pointing towards that target using different methodologies. If
Mhm.
we rally to 4,800 and we have equality to the downside, like the first break, it gives us 4,500.
That's
Um,
right. So
yeah.
I mean, I wouldn't rule out 4,500 as part of this cycle, and you could imagine that that's where we could probably see those monthly stochastics become oversold. I'd also refer to the weekly stochastics, which if you've noticed, we did get the oversold reading here.
Yeah.
But retests are super common. You saw it here, you saw it here, and it's usually that retest that is more of an important low. So we think that the relief rally will persist in the near term, but that it's pretty fragile.
Okay, we're the recent tests of TLT of 85 and a half, Katie, happened that week that Paul came out and said, I'll provide liquidity, or we will
Hmm.
provide liquidity. There have been quite a few hits at 85 in TLT. Are we going to hold it and launch after moving sideways for 2 years?
Yeah, I mean, I think the sideways is what we want to respect because it is somewhat directionless. The
Right.
monthly chart you can see is just really range bound here.
Yeah, that's a
And
long
so,
time.
so yeah, it is a long time. I mean, it does show this sort of momentum shift, but that's actually kind of long in the tooth at this
Yeah.
point. So we have somewhat dueling influences where this point's higher and this is starting to fade. So we're just going to take away a neutral bias from the long-term indicators as long as that range is intact and try to understand and leverage the short term swings. As it came down, this is on the daily chart to that support level, you'll see that there was a DeMark buy signal right there. And it was the first time in a long time that we saw that. This was our last DeMark buy signal. The implications are for a minimum of a 2-week relief rally, but it's often a more of an intermediate term low that they designate. So we're trusting that there's more upside for TLT, more downside for yields, but that longer term, it's still a neutral takeaway. You can even just see the slope of that 200-day is super flat.
Yeah. Okay. I know that let's talk about what happened on Liberation Day. So, I used to judge or select CTAs not based upon who had the best performance, but what happened to them during a drawdown. So we had a 20% sell-off in the S&Ps.
Mm-hmm.
How did your ETF fare during that 20% general market sell-off?
Thankfully we outperformed. So here's the S&P 500, and you can see the drawdown is about, yeah, so 21%. That was from the Feb peak to the
Right,
April trough. And
right.
TAC has limited drawdowns against the S&P in every environment that had a greater than 8% downdraft. And it's
Mhm.
also beat its benchmark over that period as well. And it's those limited drawdowns that really contribute to long term returns, as you know.
Right.
TAC was down about 15% from that same time frame, and it
Okay.
has, of course, recovered off of a nice DeMark buy signal. It's pretty remarkable when the DeMark buy signals work on active products, right? But they
Yeah.
still do. And so we're proud of that performance. And of course, the ratio will show that it's reverse course alongside a lot of other products that are more conservative in their structure. TAC is a sector rotation fund at its core, but it does use asset allocation. And by default, it underweights technology, which it actually just recently kicked out. And therein overweights just about everything else, including the defensive sectors.
Okay. I know you generally hold a position in oil shares. Do you now? No one likes oil, Katie.
I know.
It's one of the most under-owned commodities out there.
Yeah, and we were watching this long-term triangle formation that's loading slowly here for the price of crude oil, and unfortunately, that it resolved to the downside. I would say that the breakdown that we saw in crude, it's pulling up here in a second. The breakdown supports downside follow through for the coming months. So if you see here, it's a pretty decisive breakdown. You could draw the support even
Yeah.
farther back to the 65 to $67 per barrel area on WTI. So I think this is meaningful as a breakdown, and that's what we want to respect. As much as it might be under-owned, it seems like technically it's got its challenges, and it's almost treating this big triangle formation as a
Right.
continuation pattern longer term as opposed to a reversal pattern. So I want to respect that. TAC does not have a position right now in the energy sector spider.
What if we got back over 64? We've had a lot of false breakdowns, false breakouts, where a
Hmm.
market will take out a support level for a little while and then be back above it. Um, I've been
So we,
seeing it in
yeah, yeah, we always
throwovers.
Yeah, yeah, like a shakeout or something.
Yeah.
If the breakdown hadn't been confirmed, and for us, that's those two weekly closes below the support level, I would
Okay.
be more encouraged by that. But the fact that it's already confirmed and we have no DeMark indications of downside exhaustion, so as much as it is oversold by some metrics, like that recent oversold in the weekly stochastics, you see the DeMark indicators are really nowhere near flashing a counter trend signal. So I want to also respect that and just at least wait for what appears to be a catalyst for a bigger relief rally.
Okay. I know you followed the gold silver ratio. I've seen you talk about it on CNBC. We had that double top up there, two drives up around that 107, 110 level. You still believe in the trade of exchanging your gold for silver up here at this ratio?
So the ratio, let me see if I can find an example of it here. Bear with me. The ratio has actually broken out, and the breakout, as you'd imagine, does favor gold. Not necessarily in the
Okay.
very near term, but
Mhm.
as I'm looking for it here, it does. give the takeaway that gold is here to stay with its positive momentum and positive relative performance. Whereas silver, I would say that silver, showed that it was pretty high beta in relative terms during the downdraft. Here, I found it. Yeah, during the downdraft, the sort of pullback in silver to me was somewhat disconcerting. So if you see the gold silver ratio here, big breakout,
Yeah.
it'll retreat
Yeah.
there, and so maybe a pullback in gold versus silver, but that breakout's pretty meaningful in our work, and it negated any of these signs of exhaustion that we had. So we have shifted our bias on gold versus silver. And gold, in absolute terms, is poised to consolidate, and silver does have upside momentum. So I think if folks have that trade on right now, they can probably comfortably stay with it very near term. But I would look to exit that and ultimately reduce the silver exposure, because this was concerning. I think that this
Yeah.
downdraft, while very swift, it was pretty concerning.
Okay. So that action down there actually, even though we've recovered, is bearish to you that we took out
Yeah,
20.
yeah, and I'll
Okay.
show you what it effectively prevented the momentum from really improving meaningfully. It also, I would say, suggested that we're not likely to see a breakout, right? A breakout above the highs, just north of 35. That to me is
Okay.
made less likely by the weakness that we saw.
Okay. And the dollar, please.
hmm So the dollar has been, of course, very interesting, and from a directional bias, of course, it is a downtrend or down cycle, and it
Yeah.
is pretty meaningful long term too. If you look at the monthly chart of the dollar index, we have a breakdown pending confirmation below the cloud-based support. So, and then at the same time, we
Yeah.
had this 13 cell signal confirmed last month. So, what looked like a breakout back in here from this range failed very quickly, and there's information in that. This was our last 13 cell signal. You can see it yielded a 9 buy signal ultimately, and right now we're only on a 2. So it would suggest that maybe for 7 months we could see this down cycle and the dollar keep hold. And it is somewhat in falling with just our thinking for this year into year end. What we've seen is a pickup in volatility in equities that we think will stay with them for most of the year, and perhaps also the downdraft and the dollar will stay with it. On a short
Okay.
term basis, we do have some counter trend indications. So for
Yeah.
those who are positioned, here was a DeMark sell signal, here's a DeMark buy signal that's still active, and you can see the stochastics do support a relief rally.
Okay. It's kind of what we're looking at. So, with what's happening in the dollar, Katie, the narrative of this is a secular shift away, repatriation to buying your domestic market. That means all the people that poured money into the US are
Mm-hmm.
continuing to repatriate. That's your lower dollar. And then you have outperformance in things like emerging markets and even the DAX.
That's right.
What do you make out of it? Then they say this doesn't happen often, but when it does, it has staying power. I think it was 20 years ago the last time we've had a shift like this.
Yeah, no, I do think it's meaningful, and you can see it in the ratios. This is it's got a lot of um, indicators on it, but hopefully you can see the ratio has really surged, right? And if you take that
Yeah.
within the longer term context, it reverses not only the cyclical downtrend, but also potentially a secular downtrend in German equities versus US. So I think it's a meaningful reversal in relative terms. That is overextended perhaps in the short term. So I think short term, the outperformance that we've seen year to date is overdone for at least European equities versus US. However, once we see a pullback in that ratio, that would be perhaps an opportunity to build relative exposure to international
Okay.
markets. And there's
Okay.
always spots of strength, right? Like on the country level, we've been more constructive on Brazil as one emerging market to take a look at. And a lot of them, of course, are tied to different commodities.
Okay. Anything I haven't thought of to pick your brain about today, Katie?
No, I mean, I would just say we're going to keep an eye on not only the S&P 500, but also the VIX. The VIX, as you know, spiked, and those spikes up to 60 or so,
Yeah,
that they are usually short-term lows, right? So people get excited about that. But they
right,
also trigger like a more prolonged high volatility cycle or reflect that shift. So
right.
we do think that we're in a higher volatility cycle that should stay with the market. And we'll be watching the VIX for market timing purposes as always, and also as a reflection of market sentiment. So as it comes
So
down, we'll be watching our indicators.
short stocks with VIX 20 and buy them at 60.
There is support around 20.
Yeah, there is.
Hmm.
Yeah. So a great interview once again, Katie. Best way for people to follow you and get your research and invest in your ETF. Where should we send them?
I appreciate it, Dale. So I'd say fairleadstrategies.com has a contact form where people can sign up for a free trial of the research.
Okay.
And our ETF is available just about everywhere. And by all means, please reach out for more information. And there's a website, fairleadfunds.com, to refer to as well.
Well, much success going through these choppy waters, tariff storms, and who knows what else is ahead of
Thank
us.
you, Dale.
I really appreciate your view and hope that you have a great quarter ahead, Katie.
Thanks. Same to you, Dale. Take
All
care.
right, all right. So we'll talk in the summer.
Sounds good.
All right, Katie Stockton. Everyone, follow her on X at Stockton Katie. If you're not following Katie's technical work, you're missing out. So follow her, and I think she'll calm you down. For you nervous traders out there, Katie's demeanor can calm you down, even in a drawdown. So remember, don't just count your pips, count your blessings, and finding good people and getting good content and actionable ideas would be a blessing too, right? So have a great day, everyone. See you tomorrow. You could join the team in about 14 minutes on the morning edge. And that's a wrap. Everyone's thanking you, Katie. Appreciate your
Thank you.
edifying our community today.
Of
Thank you.
course. Take
All
care.
right. All right. So that's a wrap, everyone. Enjoy. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.